All right. So the recording started now. I'll go ahead and kick it off again, okay? Basically, the point of the session is because over the past week, I've observed people utilizing Heatseeker, and I've noticed that people are, kind of one-dimensional in terms of how they're utilizing it and how they're thinking about the overall market. The market goes up, it goes up for a very long time, and ultimately the market eventually has to come back down someday. It might come down for a couple of days, it might come down for, the next 3 months. We can't really predict that far out. But one thing I do want to teach and one thing I do want to share with you all is the next time the market is hitting a topping pattern, how can you protect yourself from being caught in that? Okay. Like I think in the past week, I've got a lot of DMs from people. They've ultimately, blown quite a bit of money away because, they were just trapped in a bunch of longs that people alerted, or, they're looking on Twitter and people are just telling them to, keep on longing everything. So today's session is going to be about that. It's like, September 22nd, we had a bear liquidation day. A bear liquidation day is effectively when you can see like bears are trying to short the market and then they just completely get squeezed out. Like September 22nd was like a historical day. Like the market just kept on going up, no pullbacks, and ultimately it ended up at high of day. And then the next day is when the market hit the reverse button and then we started to see downside. First thing first, when you're playing single tickers on Heatseeker, like if you're just trading like CoreWeave or if you're just trading Tesla or Nvidia, it doesn't matter if you still don't have a grasp on the overall market. Like if you don't know what SPX is doing, if you don't know what SPY is doing, if you don't know what QQQ is doing, and you're only trading single tickers, you're not going to make it because ultimately like Tesla and Nvidia can't go up if like the rest of the market is dumping, especially if like financials are going down. Like that's a pretty big sign of weakness, and that's what we saw on Tuesday and Wednesday. So like buy the dip is a very difficult strategy in those scenarios. That's what I saw. Another thing is that like end of quarter rebalancing, the final day for that is going to be September 30th. And end of quarter rebalancing like increases volatility significantly. So first thing first, let me go ahead and show a map of what the VIX looked like when I noticed that we're entering a window of weakness, okay? So you can go through my X feed. You can go through a lot of the comments that I left in any of the channels that I'm a part of. Um, I clearly indicated that September 22nd, if you go back to SPX, September 22nd is this hollow candle I have right here. I mentioned across like all of my channels that this is like a liquidation candle. Like, I looked at this and I was like, okay, like that looks crazy. Like, it just kept on pumping even though we're at all-time highs. And the other signal that I saw in particular was that if you looked at the VIX, it was showing that we have a range of 15 to 17 for the particular week. And we started lower at 15. Let me actually double check where exactly we were in the beginning of the week. So we ended on Friday at 1544, okay? So it's actually at the low of the range in terms of the 15 and 17 range that we have. So even as we opened the next week, one thing that I knew was going to happen is that on the VIX, the range to the upside is more probable than it breaking down below 15 because we've got a pretty major floor here at 15, right? And then the upside is at 17. And as you can see, like market opened on Monday 22nd, it was at 16. Ultimately, it ended up hitting 17. It even breached it by a little bit, and then it ended up rejecting. Okay, so just right off the bat, like when you see something like this, like you have to assume that volatility is going to increase for one reason or another, and you should be playing on the defense. Like, I think I warned a lot of people that volatility is going to increase, so like bare minimum, like you should hedge with VIX calls, and if you did, you were okay. If you went cash, you're okay. If you were only in longs, you probably got pummeled because we dropped all the way from 66.95 all the way down to 65.70, which is a 120 point drop. Okay. Aside from like how you could have identified it on Heatseeker, like let's talk about the fundamental reasons that this happens going into end of quarter. Okay. As we enter end of quarter, you see very, very large mechanical flows of the entire quarter start to hit the market. There's large funds that are operating, there's target date funds, there's institutional portfolios where at the end of the quarter or going into it, they are forced to rebalance back to what their target weights should be. Like target weights in terms of like equity holding percentages, like, you know, like bonds holding and stuff like that. So as a result of it, going into the end of quarter, like you see a ton of volatility because what funds have to do is they have to like initiate a lot of like massive order flow. And when they do that, the people that are actually providing liquidity for that are market dealers. So market dealers are the ones that have to take the other side of those trades to help the funds essentially rebalance their portfolios. And what that results in is gamma and delta exposure swinging very, very violently. Like one thing that you might have noticed over the past week is that like the nodes were shuffling like drastically, like across a lot of different tickers. And like a lot of people don't like the fact that that happens. But one thing that I'll tell you is like you have to get used to it because ultimately dealers are shifting and shuffling their exposure whenever they need, right? And there's no law and there's no indication that says dealers can adjust their exposure like right now and they don't have to do it for another month, right? Like the reality is that they have to provide liquidity to the market. So if funds are forced to liquidate or if they're forced, to do heavy rebalancing in order to bring back everything to the target weights, you're gonna see exposure shift, okay? So you have to get used to that. Like the reason why Heatseeker is powerful is because like we do like 45 or like 50-second refreshes right now. Like it's gonna get reduced to 30 seconds to 20 seconds over time. But like there's no other tool out there that literally shows you across 300 tickers how dealers are adjusting their exposure. Okay? So this is why I said the window of weakness is going into end of quarter, which is September 30th. And let me show you how I know this as well. So let me share a different screen. All right. So if you look here, I'm not. Hold on, let me just go ahead and double check. I'm gonna go ahead and show the real-time charts and how it looks right now. Like I actually went all cash on my dub portfolio, the one where I have people kind of following and like backing me with their money and everything. I went all cash on that a little bit over a week ago, and the reason I did that is because I know like the volatility is going to increase going into the end of the quarter, and if it's going to increase, like I just don't want to be stuck, with my pants down. So ultimately, I'm staying full cash. But the thing that particularly stood out to me is that like there's a ton of downside hedging flow going into September 30th, which is the last day of the quarter. So, ultimately, like this is happening because like dealers also have to remain hedged, like in the scenario that like funds are gonna have to liquidate to kind of, take profits on a lot of their equity positions so they can rebalance back to what percentage they need to be at in terms of like long equities, okay? So this is kind of them, preemptively preparing for that. Like, I would be highly doubtful that this actually drops all the way down from 66.45 to 64.80 because that's a pretty significant drop to happen within a 2-day period. But it's something to be cautious about. And that's why I'm telling people, like, we have a window of weakness coming up. Just be careful, okay? Like, like when I say these things, like you just have to keep track of it because like I'm saying them through experience to kind of, save everybody from just being trapped along. So hopefully that makes sense and like it kind of covers like the question with regards to like end of quarter and like why we're entering a window of weakness and a window of volatility. Do you guys have any more questions with regards to why the volatility keeps on shifting and why you're seeing so much shuffling going into the end of the quarter? Yeah, let me know if anybody has questions with regards to that because end of quarter happens 4 times a year, so you just have to be aware of it. Yeah, it's ultimately institutional rebalancing, and like when institutions have to rebalance, like who needs to be on the other side of that rebalancing? It's the market dealers, and Heatseeker is essentially showing dealer exposure. So that's why I keep on saying like, hey, be cautious, like don't get caught with your pants down. Like on September 22nd, I told everybody like, market is feeling toppy because like all the signs are here. Like Heatseeker literally shows you like we're entering a window of weakness. So why would you be fully exposed in longs with no downside protection, right? Like if you were, then it's a good learning experience. Like next time you'll be able to identify and see that without me having to call it out and, tell everybody like 100 times. T Sabi, like I don't know if there's any guarantee that we're going to drop heavily into 930. Like, only thing I'm saying is that if dealers are hedging for downside like risk, like we should be we should be on the same page as them, right? It's like I don't want you guys to like slam puts and then expect it to drop like 200 something points or like 150 points from here, but like just don't be fully exposed long. Like that's the most important part. Like I'm actually waiting until this 930 washes off to actually start getting into positions again. I don't think we're starting a bear reversal. Like I think we're just entering a window of weakness right now because it's quarter end rebalancing. Okay. All right. So I went over that. There's a couple of things I'll have to share. So now you know why we're entering a window of weakness. What that means is that like the buy the dip strategy has a high probability of not playing out. Like even if single tickers are showing upside nodes, the number one rule that you have to follow is that you have to trade in the direction of the overall market. Like if indexes are showing down and you're trying to buy the dip on, like major tickers like Tesla or Apple or Meta or Microsoft, and they're not hitting their upper nodes, like you know why that's happening. On the flip side, if you're identifying and seeing a window of weakness across the broader market sector, there are trades that you could take to the downside that worked out really, really well. Okay. Like IREN is one of them, IREN. Like we went from 50 down to 40 perfectly within like a 3 day period. Bloom Energy topped out, it dumped all the way down to the target. Oklo dropped from 120 to 109. Like this is another one that I shared and posted. And I think the other one was, I mean, CoreWeave obviously was a rejection off of 140. I don't want to talk about that one because I know it's going to hurt a lot of people's feelings, but let me see what the other one was. RGTI. RGTI also topped out at 33 and it printed pretty decently on Friday. Yep. So iPhone 23, I only focus on current window until September 30th for now, but I am looking forward and beyond to understand what the market might want to do after the quarter end rebalancing is over. So it's a little bit of both. It's like, yes, I'm looking into the future, but I'm not entering and I'm not exposing myself until like the window of weakness is over. Like it's just too uncertain for me and like we don't know what how those funds are positioned, right? Like even the market dealers don't know how those funds are positioned. But the one thing that we do know is that if if the funds are overbalanced on like equities, for example, because they have to cash out on gains to be able to rebalance down to like a 60 to 40 ratio, then you're gonna see heavy selling. Okay? And you just don't want to get trapped in that. Like if there's funds that are actually down on their equity plays, like they will be doing heavy buying. But yeah, to be completely honest, like given that the market has just been going up nonstop recently, I'm just leaning towards a little bit of weakness. I don't know. We didn't go over the UPST dump analysis, but I did see everybody try to buy the dip on UPST, and like this is the part that kind of prompted me to run this session. It's like if the market is topped on September 22nd and we're seeing that it's gonna go down, like you don't buy the dip on growth. This is not a heat seeker thing. Like this is more so like a fundamentals of trading kind of thing. Like if the market is showing weakness, you look for tickers that you want to short. If the market is showing strength, you look at tickers that you want to buy the dip on. Okay? Yeah, if you got coconut, if you got divergence like that, like my suggestion is just to sit out. Like my biggest motto is like when in doubt, sit out. Like you don't need to trade every single day. You don't have to trade every single hour. When things are just not lining up, like you have an option to stay full cash. I think the biggest problem that a lot of traders have is that they feel the obligation to trade every single day. And worse than that, they feel the obligation to take multiple trades a day, even if there's no clear setup. Like the good thing about Heatseeker is like it tells you like what days we're gonna have clean setups versus not. And if you're going against the grain and you're still taking trades just because you feel the itch to execute a trade, then you're probably gonna lose money. Yeah, like Reddit looked good, like UPST looked good, Microsoft looked good. Like there's so many tickers that look good, but then if you looked at SPX, like it's just got a fat node going all the way down to September 30th, right? So it's like, you could try to go long, but like nonetheless, you should be hedged regardless. Like you don't just go like straight naked long and expect the market to keep on pumping everything. iPhone 23, like I don't know, I don't to be completely honest, like when they do rebalancing, like it's more so rebalancing in terms of their overall portfolio. Like it's not something where they're like, yeah, because they're down 20% on BA, like they have to increase their exposure to make sure that their BA exposure is like a certain percent. There's some funds that do it like based off of sector. There's some that just do it based off of like equities versus bonds. There's just so many different like variables to that. Like I don't think I can give you the answer to that. The like I don't yeah, one thing that's for certain not true is like just because BA is down doesn't mean that it's gonna get bought. Yeah, I noticed the BA King node is up. Let me actually take a look. Yeah, it's showing for this week it could potentially go up to 230, so it's something to keep an eye on. But yeah, going into October 17th, it's more so split. So all right, sounds good. So Josh and John Wick and Jake is saying that we should cover the Heatseeker for the SPX index short on Friday. Dolce, when did I start seeing the first weakness signs? I started seeing them last week, and I called it out. And on September 22nd in particular, like that's when I told everybody like things are starting to feel toppy. Like it mainly comes from experience. Like I've experienced the market over a very long period of time. And like I know what a bear liquidation day looks like. A bear liquidation day looks like it looks like Friday or it's Monday of this week. Like shit literally just went up nonstop. It's like even the pullbacks were so minimal and minor that you couldn't even scalp puts on a day like that. Like when you get a day like that after bears have been trying to short for so long, like they end up in a situation where they're just like fuck it. Like they just give up trying to short the market. And like that is a perfect opportunity for them to finally start pulling the market back. Yeah, yeah. Okay. All right. Sounds good. Let me go ahead and show. All right. Let's go ahead and go over the Friday price action for indexes then. A lot of people that read the chat, you would know that I always tell people if you are not proficient in trading SPY, SPX, QQQ, IWM, then you have no business trading any other ticker. Like I say this, like there's professional traders that say this, like, Mr. Dillon at a hedge fund, he says this, like we're saying it for a reason. The reason we're saying it is because when you're trading single tickers like Tesla, UPST, MicroStrategy and stuff like that, there's so many more variables involved that you have to track, which is, is this ticker in a sector that is currently being rotated into or rotated out of? Like, is this ticker, leading into a potential news event? Are they leading into earnings events? Or it could be something like, did this ticker recently have earnings and drop because of it? Like, there's so many different variables you have to track, right? But SPY is a combination of the 500 largest market cap companies. Like, it's a combination of that, right? So if you're thinking about how it's balanced out, like it's a lot more like neutral because like you've got financials in there, you've got industrials in there, you've got tech in there, you've got, biotech in there, like healthcare. Like there's so many different sectors you have in there. So it's the price action is a little bit more stable and there's less variables that you have to worry about. Like if you need to get better at price action analysis and like executing trades in general, you have no business trading Tesla or Nvidia. You should be trading SPY. If you cannot trade SPY, SPX, QQQ profitably, like I urge you, please, like just stop everything you're doing and just go back to trading futures or go back to trading only SPY, QQQ, and SPX, okay? Like if you can't trade SPX successfully, like you have no business trading any other single tickers. Like even my profit and loss, 90% of all my profits in the market come from SPX itself. Like I trade SPX because it comes with the 60/40 tax benefits as well, where 60% of your, earnings on it are taxed as long-term capital gains and 40% is short-term capital gains. But ultimately, like the reason I do it is because it should be everyone's bread and butter. Like SPY and SPX and QQQ is just less impacted by like company specific news. So you don't have to like there's just less variable risk involved in it. Okay. All right. Casanova, you said the best way to trade a ticker is to open a position when it seems good and roll positions as Heatseeker changes. I went over this in a couple of previous sessions. Like the reason I urge people and encourage people to trade reversals and deflections off of major nodes is because it provides the best risk to reward, where even if you see shuffling where like a ceiling rolls down, for example, you can still get out like with decent green, or you can stop out with very, very minimal loss. But if you're in a situation where you're chasing a node where it's already like halfway there from like where the floor node is, and then you get a reshuffle, then you can end up in significant drawdown. So first thing first, like just make sure you're taking only the best risk to reward trades. Like it should be a 3 to 1 or better. Yeah, Fledge, if you get proficient in trading indexes, what's the point of trading individual names? Like ultimately it's for fun. When you're trading individual names, like there's a lot more luck involved in the sense where, you'll take a good example for like you'll take a trade like UNH for example, where it's like, yeah, this shit looks like it's bottoming. Heatseeker shows upside to like 400 to 410 in the next few weeks. And you'll take it because it's a good setup. And then you'll get news on Friday with the Warren Buffett 13F filing saying that he loaded the boat on UNH. And like you end up with the 5,000% trade. You are not going to get a 5,000% trade on the SPX. Like you might get it on like NDX, but you're definitely not getting it on SPX. So you just have a little bit more chances of like getting lucky as a byproduct of doing the right thing, and you're gonna hit a major home run. On the flip side, you can get unlucky where you take a beautiful setup on an individual ticker, and then the CEO of the company decides to do an offering and they dilute their stock. In that scenario, like you're gonna get shit on. And like those things are like we just can't predict that, right? So that's what I say. Like single tickers just have a lot more luck involved in terms of like how much you're able to make off of them. So yeah, I would just be very cautious. Yeah, don't look at MicroStrategy anymore. Like MicroStrategy is fucked right now because of MSTY and like just all of the shenanigans that Sailor is running. Like I don't really look at that ticker anymore. MicroStrategy is just like very heavily manipulated. It is a dealer's dream because like the premiums are high and they're just able to bank on selling premiums all day. All right, so without further ado, I am gonna go into a recap of how Friday played out, okay? Let me see. All right, so I've got a Heatseeker bot played out here. Anybody who has access to Heatseeker should be able to see this. Um, I pulled up a couple of maps earlier to kind of demonstrate, but let's see where it was. Okay. All right, so first thing first, the example that we're going to show is going to be for Friday the 26th, okay? September 26th. Before I go ahead and do that, let's go ahead and see what the map looked like for SPX on market close on the 25th. All right, so after a couple of days of pullback, so starting from the 22nd, we had 3 red days, okay? We had Tuesday was red, Wednesday was red, Thursday was red. Generally, like, after a pretty good drop like that, you can expect some kind of dead cat bounce or something like that. And if you look at the Heatseeker bot for this particular day, this is where the market closed on Thursday. It closed exactly at 66.05. For the next day, it has a floor at 6600, which is a 5 point downside from where we closed at. And then the first point upside is 20 points up, and then the next one after that is 45 points up from where we're at. So just from this, like if you're looking at it and let's assume the market opened flat, where would you say like the better risk to reward trade is, right? The better risk to reward trade is obviously if we open like this, you want to buy the dip and then you want to play to the upside, right? Because you have 5 points of potential downside, but you've got 45 points of potential upside. That is a 9 to 1 risk to reward ratio. Like you take that like any day of the week, okay? So let's go ahead and draw this out on an actual chart. Let me flip my screen over real quick. All right. So when I'm day trading, like I mentioned to most people, I usually play on the 3 minute chart. So usually what I do is this, like I'll draw like a line at 66.25, which is right here. And then I'll draw a line at 6650, which is right here. Okay. So first thing first, generally in terms of the ceiling nodes, what I tell people is that you should always expect it to react to it within a plus minus 5 point range, okay? So make sure you keep track of this. So if it's 6650, it can reject anywhere from 6645 to 6655, okay? So yeah, we all wish it could be a lot more accurate than that, but truth be told, it would just make our lives way too easy. So you can kind of draw a zone from here to like, you know, down here. And like anywhere in the zone, like you would expect some kind of rejection, okay? Let me see what time this was at. This rejection happened at 10 a.m. Let's go ahead and see what the map looked like at 10 a.m., okay? All right, if you look here, if you look at the gamma chart, yeah, even here, like you've got a major keynote at 6650, and really the only major one down from there is at 6630 and 6625. So if you even shorted at like 6645, like the max risk upside is like 5 points, and then you've got a potential, 15 to 20 point reward to the downside. So it's a minimum 3-to-1 trade or a 4-to-1 trade. So, it's just a good setup to take. On top of that, like if you look at the Vantage chart going into the next 2 days, like you've got some pretty strong downside accumulation here, which only supports that evidence, right? So, I mean, I don't know how much more I can explain here, but as I was saying, like you want to play deflections off of major nodes. So in this scenario, like 6650 is the peak. You don't see anything major above that. If anything, the next strongest node is actually to the downside here at 6625, okay? So, you've got your take profits at, 6625 first. You put a trailing stop, or as long as it doesn't go back above 6650, you would still remain short. So let's see what happens here. All right. As soon as it hit 6650 right here, it was off by like literally 50 cents for like 1 point. It's as clean as it got. Like it literally just started dumping. The way I would trade it is like, after it dumps down to that first level, you take partials here, right? You take partials here because it's a potential bounce level. Like if you look to the 1 minute chart, like it actually did like kind of bounce there. Like, it hit and then it struggled a little bit, then it rejected and it kept going down. But ultimately, like, let's go ahead and see what it looked like here. So next is at 1024, right? So let's see what the map looked like at 1024. If you look here, as it approached, hold on just a second. It's gotta be, sorry, I put the wrong date. It's supposed to be the 26th. All right, so if you look here, you will see that the major bounce level is at 6600. So you've got like 6570, 6565 here, but if you actually look, this is a gatekeeper node. And generally speaking, what I say is that the first test of a gatekeeper node, in most chances, it's probably going to bounce. Like you've got like a very, very high chance of a bounce there. So like even though these lower ones are accumulating, like you don't get greedy for those. Like you already wrote it down from 6650 all the way down to 6600. That's a 45-point drop. That is very, very significant. And also, what you'll notice is that if you look at the SPY in QQQ, it actually overshot the king nodes. And usually, when that happens, it has to snap back and reverse back to where those king nodes were, especially if there's no further downside accumulation on those charts. So on those charts, there was no more downside accumulation. 6600 had like a major floor here. As I was mentioning, there's always going to be a plus minus 5 points of variance. So naturally, what you could do is you could draw a line here at 6600, right? There's one right here, and then you could draw another zone right here, 6605, like to 6595, okay? So as it starts to enter the zone, like what I was mentioning is you always want to start trimming into the zone. So like on this fat white candle right here, like quite honestly, that's probably where you should be trimming with like limit orders. From a price action standpoint, like it's just a bounce off of the previous day. I don't think that was the previous day high, but like this is a pretty significant level that it kept on resisting. So naturally, after it breaks out, you can expect it to retest and then bounce from there, which it perfectly did. So not only were you able to ride shorts from here with like a very like you literally had zero drawdown if you caught this one. But second of all, like you could have rode it all the way down. Not only that, you could have played the bounce off of this, and like that would have been the low of the day, and you just ride it all the way back up to 6650. Okay. So this is a very simple range day that you could have traded with Heatseeker. Remember what I was saying is that once it breaks below a level, like it becomes a pivot flip. So we flipped 66.25. What you're seeing is the first time it rejected, the second time it rejected again, and then what is the chance that it rejects the third time? It's 33% or less, which means the chances of it breaking above it are 66% or greater. So you don't try to play the rejection here. If anything, like, if you're still in longs, like you would be like, okay, it's gonna bust through and it's gonna rip. And like we knew it's gonna rip because here, let me actually see, like let's see, 12:15, okay? Let's see what the map looked like at 12:15. Okay, let's see what it looked here, okay? All right. So at this point, after it bounced off of 6600, good news for bulls is that the 6570 and all of these lower ranges started diminishing, which means that hedging pressure is gone from these nodes. You're seeing a 6625. Like you can see it as a gatekeeper, but again, remember what I said is the more times the level is tested, the weaker it becomes. The potential of a rejection on the second tap is going to be 66%. The potential of a rejection on the third tap is going to be 33%. So that means you have a two-thirds chance of it actually breaking through on the third attempt. And sure enough, it did. And we closed the day really close to 66.45 and 66.50. So, long story short, that is exactly how you could have traded the indexes on Friday, shorting from the top, which was a level that was printed even the day before when the market closed, all the way down to the bottom where the gatekeeper was tested for the very first time. Um, and then you could have just pretty much wrote it up back to high of day. So hopefully that explanation made sense. Anybody have questions in terms of the SPX case study that we just did? Yeah, Max and Nate Beard. A gatekeeper node is effectively a major node that is sitting in between the current node that price action is at and the next major that you're seeing in the opposing direction of it. Okay, so let me actually pull this up real quick. So from a gatekeeper standpoint, like you're seeing 6600 is like the first major, right? But in reality, like the major key node is all the way up at 6650. Like this is the highest absolute value node. It's at 29 million as opposed to 28 million here and 28 million here. So from here, like the ultimate target it wants is 6650. The only thing that gets challenging is if there's another node of like almost like a pretty significant value, like the 6625, that is sitting in between where price is being delivered from, which was 6660, to the ultimate target, which is 6650. Like if the 6625 was like never tapped, like it's probably gonna reject and you're not gonna get 6650. The truth is the 6625 was already tapped two times and then it was going for it a third time, which means that it had a two-thirds chance of it breaking above and going to the final target. Does that answer your question with regards to what a gatekeeper node is? This one is also covered in a couple of the previous sessions as well, so you should probably just you can go over those. Yeah, coconut, I can go ahead and consider that kind of form factor. So there's a couple of things that I've been trying to do to make this possible. The reason that it's very difficult right now is because we do refresh frequencies like as frequent as possible. Like I'm placing a lot of priority on that right now. Um, so one of the major things I'm working on right now is just trying to bring the refresh frequency down from 50 seconds to like 30 seconds or less. Like that is the number one priority. And after that, like I can go ahead and see about like, yeah, like anybody that does it in a bar format, like it's a lot easier for them to go ahead and show like how much the amount has changed because they're aggregating all of the data. But like I'm doing it on a per, like I'm trying to do it on like a per column basis, so it's just an extreme amount of processing that's required for it. If 6625 was a larger value, yes, it could become the king and the 6650 is ignored, but the dependency is how many times that 6625 was tapped and tested. Like, remember, like the number one thing I always say is like price action is king, like it's always number one, and you want to supplement it with Heatseeker. So naturally, like when a resistance level is tapped many, many times, like every time it's tapped, it gets absorbed. Like the sellers get absorbed, and naturally, like it eventually will break through. Yeah, king node can be yellow or purple. Like when I'm talking about king node, like the reason I call it a king node is because I only want people to care about what the absolute value of that node is going to be. So that's correct. All right. Any other questions? All right. So no more questions. I will go ahead and share the next case study then. Give me 1 second. All right. So the next one, I'm going to go ahead and show Oklo. Like this one was a pretty clean one. So if you look at the Oklo map, on the morning of the 26th, what you'll notice is that there's a pretty clean setup here with the king node being at 120, the next one down being at 117, and then the next one down, which is the king node, being at 109, okay? So this one, I like it in particular because the major upside is capped at 120, and there's not that many strong nodes to the upside of it. Whereas the downside nodes are pretty strong. Like you've got one which is negative 2 million at 109, you've got another one at 117, 115, okay? So this one like is one of the ones where if you're identifying a potential window of weakness, and if I know like SPX is eventually going to reject that 6650, I'm looking to trade downside on individual tickers. So let's go ahead and see how Oklo played out on the particular day. All right, so Oklo, this is my Oklo chart. All right. So this one, like people, I know people that swung it as well, and like quite honestly, like even if you swung it, like you could have made money. This is at 120. All right. So this, I think it's actually here. Yeah. So the Friday open, I'm gonna draw a vertical line wherever we opened on Friday. Okay. So Friday open was right here, and then you've got the 120 node right here. I'm actually gonna remove this. And then you've got the 109 node right here. Like this is ultimately to just like I'm more so like just flexing how accurate Heatseeker could be even on single tickers. Um, and if you see like if you're able to catch any kind of short like near the 120 level here, and remember like one thing I said is like for indexes like shuffling is like pretty rapid and you see the most like institutional like dealing and selling of options in the first 30 minutes. So like I usually tell people to wait it out, but the caveat and the nuance is that like if there's something that's super obvious and it's not an index ticker, like you can still take setups on this one. Like the shuffling is mainly for indexes. Like that's where you see most of the shuffling earlier in the day. But Oklo, like this one, like literally played out perfectly. Like I mean, it doesn't get any cleaner than this. Like I know a lot of people played it. I know a lot of people didn't play it. If you didn't, then you should probably recap and ask yourself why. But this was a very, very clean play that you could have taken on the day for a downside short. Yeah, in this case, Yen, like you could go ahead and buy calls off of 109. Like generally, like the one rule of thumb that I have is like after I play a ticker for like a really, really nice clean setup like this, like I just let it be. Like this is another lesson I wanna go ahead and teach this again as part of the 104, but like don't marry a ticker. And like don't keep on double dipping and triple dipping and quadruple dipping into a ticker. Like one of the biggest mistakes that I saw people make this week is that they were literally double dipping and triple dipping into CoreWeave. Like, I was mentioning like the target for CoreWeave was 140 for the week, right? And then let's see if we actually hit it. Like I think yeah, Thursday. Yeah, I said the target was 140 and I even called out like, okay, we're approaching 140, you want to go ahead and scale out. And we tapped 139 and we rejected. And people just kept on buying the dip. Like people were like, "Oh, okay, it's gonna hit 140 again," and then like as it's going down, they're like, "It's gonna hit 140 again," and they just keep on buying the dip. And what I'm saying is like, after a level has been tapped, and like this is pretty much close enough to being tapped, one thing that you have to really, really keep in mind is how much of the upside exposure has washed off because that 140 node was very, very bright earlier in the week, but after we got close to tapping it, it washed off significantly. And what that means is that that upside magnet is just not as strong anymore, and you just want to let it go. Like just stop fucking with CoreWeave. Like, we made a lot of money on it, and if you missed it, then you missed it. You move on to the next ticker, right? But like if you keep on trying to go back to the same ticker, like the dealers are done with it already, and like you're playing something that you don't have an edge in anymore. So like when I say this, like I really mean it. Like when people keep on saying, like even Oklo, like after we shorted it down to 109, like they're like, shit, I missed it. And they're like, how can I short it again? Like that's the number one thing that's in their mind. But if you miss a move on a ticker, like just let it go. Like the thing you should be doing is like understanding why you missed it and try to find out how you can catch it next time. But like you shouldn't like go back to it and try to get the scraps or like sloppy seconds or sloppy thirds or something like that. It's one of the worst things you could do and it's literally gonna kill you. Like it's gonna destroy you. Like you don't want to do that, okay? Yeah, you will see a reduction in the absolute value on the 140 node, and that is exactly what we saw. Like you can go ahead and pull up the Heatseeker bot and look at it, look at what the magnet was looking like, on, the 25th in the morning, for example, and look at what it looked like on Friday. Yeah, Tesla was a pretty clear one for me. Like I saw Tesla because somebody was asking me about it. The 430 was the major node on Tesla for Friday. And pretty much like anytime it dipped below towards like 420, like this is a dip buy level here. I mean, 426.9 is like just, I mean, this is more so like a Tesla specific, like very, very unique thing. It's just a number, like a cycle. Like Vu is asking, like, do I care about psychological numbers? Like, yes, absolutely, I do. And there's many reasons why I do that. So if you know Elon Musk, like his favorite number is 420, like, I mean, literally he's a troll, but his favorite number is 426.9. So naturally, like you see a lot of like support in that level. Not only that, on the day, like even when the market opened, the king node was always sitting at 430. And remember what I said about the king node, okay? Let's go ahead and see how many times this was tested throughout the day, which is how you could have known it was going to break out eventually. It tested it once, it tested it twice, it tested it three times, it tested it four times, it tested it five times, and then it fucking exploded from there, okay? As this was exploding, what you'll notice is that despite the 430 node being there, we saw upside accumulation towards 440 as well. And naturally, like even if you play a breakout, if you didn't catch the lows at like 420, like you still could have made good money on this one. So this is just a clear example of like, just because like 430 as a key node doesn't mean that it's never going to be able to cross it. Like you have to know and understand like how many times that level is tested. And if it's been tested enough times, like you're going to get a squeeze action like this, especially if you see the upside nodes accumulating. Okay. So like this is exactly how like the SPX one played out earlier, like on Friday. Like just keep this in mind for like individual single tickers as well. All right, so let me get into some of the questions that are being asked here. I'm gonna scroll up to the top so I make it fair for everybody, and I just want to make sure I don't ignore people. Um, okay, so we went over the 6650 short and then the buy the dip off of the 6600. Um, Yeah, Fledge, that's a good question that you're asking. You said, couldn't that also be interpreted in the way that as the price overshot the king nodes on QQQ and SPY with no large accumulation to the downside, the snapback to the king node could reject and the floor would be weak, hence potentially price could rug. I think that is true, but the reality is that like the 6600 floor is just like really, really big. Like if there's a floor, actually, let me go ahead and do this one. So going into the end of the day on SPX, this is actually going to be a very, very good one because SPY and SPX looked like it could potentially be a rug pull setup. And what I mentioned is that it's not going to rug, and I'll let you know the reason why I said it's not going to rug, okay? So SPX going into the end of the day had a secondary major node at 6645, and then it had a king node that was at 6650, okay? And it kept on rejecting in that zone, but let me tell you why it didn't rug. So let's see here. Okay, I think 1551 is a good nah. Actually, let's go ahead and use this timestamp. 1515 timestamp. Okay, one thing I was mentioning is that if you want to trade SPX or if you want to trade SPY or QQQ, you have to look at all three tickers at the same time. The reason you have to look at all three tickers at the same time is because SPY is a derivative of SPX, so naturally they're gonna have, weight on each other. And QQQ makes up more than 50% of the S&P 500 now. So it also has like a very, very strong pull and weight on the SPX. If you're looking at QQQ at 1515 when SPX was looking very bearish, like SPX on the map itself looked like a rug pull setup, SPY looked like a rug pull setup, but there was one thing that was preventing the market from going down on Friday going into close. It had a major, major floor node at 595, and the current price was above it. So at this point, it was 595.74. There was a major, major, major fat floor at 595, and this would have held the market up from rug pulling. And let's go ahead and look at what QQQ looked like. 1515, which is right here. Sure enough, it held. Let's see if it ever broke below 595. Like 595 is here, never even got close to it. Like it just had very, very strong support, and it wouldn't have been able to rug the entire market. So that's how you know it's going to be a chop setup. When SPX and SPY is showing that it's topping out at 6650, and there's no floors to the downside, and it seems like they might be able to rug, what results in a choppy setup is when QQQ has a very, very strong floor node right below where current spot price is. Like that's how you can guesstimate and assume that the market is going to chop into the close. And like I called this one out like a couple of times, and I was like, yeah, it's just going to chop into close, and we're going to get a cliffhanger, so that it leaves people wondering what it's going to do over the weekend. And like that's exactly what happened. Yeah, Sean R. I mentioned this one in previous videos, but Vex is more so used for swing setups and like very, very speculative like scenarios. Like I don't have a clear explanation of like why it works the way it does. Like I can just tell you it works. But it's more speculative. So like just don't put as much weight on it, especially for like the near term expirations and like how things play out in the near term. Like I generally always prioritize or Gex, and I look for Vex to be a supporting factor in my hypothesis. Like I just shared a lot of examples previously where like Vex is the stuff that pretty much got us like a lot of lucky streaks. Like, UNH was one example where like the Vex was shooting like sky high, like right before the 13F filing happened. That one hit like 5,000%. The Vex was the one that was pointing all the way down to 160 and 155 right before Lulu earnings. And Lulu earnings, we tanked like 25% overnight, and that played out. So it's just one of those things where it's like speculative, where like if I treat it like the Bible, like my hit rate's probably like 50% or like 60%, which is not that great. But the ones that do hit as a result of it are just like massive, massive runners. So like that's the reason like I actually look at it and care about it. Yeah, if you're a pro member, yes, you do have access to the data at all times, and you can use the Heatseeker bot channel. That's correct. Yeah, Anthony, you asked the question, what evidence should you look for that the price might run through the king node or the node that you're looking for a bounce at? This is primarily price action. Like if it's a node where the price hasn't tested it at all and like price is looking pretty extended as it's approaching it, like you can bank on a potential bounce happening there. Um, but ultimately, like for the gatekeeper nodes or like the king nodes, especially when you're trading SPX, SPY, and QQQ, like even if SPX is showing like further downside nodes, if SPY and QQQ are approaching a fresh node that is like king that has never been tapped before, like I'm not trusting that SPX node that's further to the downside. Like yes, I'll put a little bit of weight to it and I'll be like, yeah, that would suck if that hit. So I'm gonna size small. Like I still wouldn't like I would still take my shot is what I'm saying at a bounce. And yeah, Vu, you asked, do I believe psychological levels are a thing? Yeah, psychological levels are absolutely a thing. Just like Tesla for 2069 is, like even numbers are big. You can also use like GAN numbers, which are like, cubic numbers and stuff like that. Those also work. Like there's a lot of like numerology aspects of trading and like, algos generally integrate a lot of that. So I do believe in psychological resistance and support. But that's just more so fundamentals of price action. iPhone 23, you asked, when I look at a ticker, it has a keynote for the week, but not super strong, while there's another keynote that is 2 weeks away from now, but the number is much more bigger in absolute value than current week one. How do I interpret that for the short term for this week? Is the current week node? So in this scenario, the current weak king node to the upside with a lower value could be taken into consideration. You don't want to ignore the nodes, even if they're a week out, 2 weeks out, or 3 weeks out, if they're significantly larger than the ones that are on current day. First Solar is like a pretty good example of this one. Like First Solar was like it was running pretty hard despite like market showing weakness. And that one had a key node up to 250 for October 17th or something like that. So, like that is evidence and proof that like even nodes that are like very far dated do have pretty strong pull and have a pretty strong impact. But for dealers, in order for them to like minimize the risk, like the most important thing is like current day, like 0 day expiration. Like they ultimately need to make sure that like, they're not caught off guard or caught on the right song or on the wrong side. So that's why I place a lot more emphasis on like current day columns rather than going forward. Like if you're seeing a setup where like there's a major node like 4 weeks out, what you could do is you can use the current day node to play a swing setup for 3 to 4 weeks out towards that 3 to 4 week target that is there. Like I covered this in the 103 session, so if you need to look into how to do that, you can go ahead and rewatch and review that one. Like that's actually a really good swing setup. Like if you're seeing a major target 3 to 4 weeks out, it's perfect to play a bounce off of a major node on the current week nodes and then play a swing into the 3 to 4 weeks out. Do I count node taps in the pre-market to determine a node holding or not? Generally, I don't use pre-market data. I just don't think the volume is significant enough for me to consider it in my analysis. Like I know some people like live and breathe and like live and die by pre-market stuff, but for me, I just haven't really seen too much benefit in that. All right, just looking over the next questions. Yeah, I think somebody wanted to cover Costco. I actually didn't have my eyes on Costco for Friday because I think they were just coming off of earnings, right? Yeah, did anybody trade Costco? Like, I don't really know or remember how that one played out. I think Costco had like very, very low liquidity in terms of the dealer exposure after earnings. So, all right, Shorty, you asked, are we supposed to not trade the first 30 minutes? Are we somewhat able to see these huge sell-offs or gap ups at session start? I note the king notes of certain tickers, and when we're 30 minutes in, we're already at that level. Yeah, so shorty, like earlier I mentioned, especially for Oklo, like, the first 30-minute rule is more so for indexes and like ETFs and stuff like that, like SPY, QQQ, and SPX. It doesn't mean that you can't do them for single tickers. Like I mentioned this in chat as well, but like any rule that I share is just a rule. Like you don't have to like live by it. It's just something that I suggest for like newer traders until they become more familiar with utilizing Heatseeker. Like if you don't know what you're doing and like you're waking up at 9:31 and you're looking at the map and you're like, okay, this looks like a great trade on SPX, like you better keep your eye on how the map is shuffling for the next 30 minutes because 90% of all the institutional selling volume for options contracts happens in the first 30 minutes of market open. So naturally, you're going to see the most shift in terms of the dealer exposure during that first 30 minutes. But yeah, like, if somebody asked me, like, do I never trade in the first 30 minutes? My answer is no. Like, if I see a clean setup, I'm going to take my shot still. It's just if people don't know what they're doing and they just signed up for Heatseeker 2 days ago, like, it's probably something you don't want to do. Max said, if a Gex doesn't have a significant big node, could I expect chop for the week? Um, no, I wouldn't say that. Like, even if there's no significant big node, like you could still get a pretty big move. A chop is more so if there's two king nodes that are creating a very, very tight range, or if there's just a bunch of like significant nodes that are like all over the map, because that means you have a lot of magnets pulling in a lot of different directions. So naturally, you're gonna have a choppy setup. Can I show first solar now on Heatseeker, same setup I mentioned strong on 1017? Sure. You should be able to pull it up too, but I can show it real quick. It's the first solar, like that trade is already done by the way. Like it's long gone. Like I think Keon trades alerted for solar. He also has access to Heatseeker, so he probably saw it on like Heatseeker and Flow. But ultimately, like it was a good trade, and like a lot of people made money on it already. Like there's no point chasing this one anymore. But yeah, like 250 over here on October 17th, and then the Gex also aligns there, so a lot of people took that one for a swing trade. Like I just don't really see the risk to reward being good anymore because like for example on this week, like the next floor is all the way down at like 205. So it's just that's a 15-point potential downside to a 30-point potential upside. That means it's only a 2-to-1 risk to reward. So I just don't really like to take, yeah, 2-to-1 is not good enough for me. Like I need a 3-to-1 or better. Yeah, Anthony, that was an interesting one. Like Tesla is one where even pre-market or like off hours, like it actually has pretty good amount of volume. But yeah, the 450 node for this week for Tesla actually was acquired, and it happened in the after hours. It tapped like 449 dot something, and it rejected it. So one of the things I was mentioning to people is like, if Tesla closed the day at 443 or 444, and the king node is at 450 like you're making a mistake by swinging it for another 4 to 5 point upside because if that happens in the after hours, like it can reject and dump from there. So always keep into consideration your risk to reward. Like, we literally ripped on Tesla all the way to 443. So if you're holding to 450, like that's just pure greed. And yeah, the next day it did fall to the low node. Yeah, Anthony, that's exactly what happened. Nate Beard, can we look at the heat seeker for Costco? How about you pull up the heat seeker for Costco and show us what you're seeing? Because I don't really see much on like Costco is like it's an okay ticker. I just don't really like this kind of map. Like it's all over the place. Like I just don't see why it's a good setup. Like you're looking at this and I mean this is like a Rainbow Road kind of setup. Like you've got a 930 target up here, you've got a 925 target, you've got 910, 900. And one of the things that I warned and advised is that if these numbers are not 4 digits or greater, like they're just not they're not reliable. So, for me, like I don't really care. Like I see a good Vex node for October 17th up at 1000. So I might take a spec like if it dipped down to like 900, for example, like this is one setup where if it came down here, then I might load swings for October 17th and like try to ride it back up. Like this is like the only like worthy setup that I potentially see on Costco. So I'll keep an eye on it to see if that plays out. But yeah, outside of that, like I don't really see much else. Like it's just one of the spec swing setups that you take. If the chart looks good, then you just go for a ad bat and see how it plays out. Yeah, earlier, like, so anybody that's asking what does the Heatseeker show for what particular ticker, like, I'm not going to answer those questions. Like, it doesn't help and it's not conducive to people like improving with the tool. Like, if people have a more particular question with regards to how to utilize it, then I can go ahead and do it. But, if you're just asking for maps, then, you should just join Owls and Tuesday I'll open it up for free trials and you can try it then. RR is good. Like I already saw this one the other day. Like RR I've been in since 80 cents, so I've got like a lot of upside on this one. I'm pretty excited though because it does show a node all the way up to 6 for October 24th. So this one, yeah, this one can move up another like 50% potentially. So we'll see how it plays out. But like RR is becoming a meme stock, so I would just be very careful. Like it's already overextended. Like RR is very, very overextended. Like this one pumped over 400% in like less than a couple of months. And like I know this because my entry was at 80 cents like a while ago, like a long time ago. Yeah, this one, yeah, this is like I bought this one like all the way back in December and it's just been going up nonstop. So yeah, I guess it has a node up at 6, but I mean, quite honestly, like this was pretty much almost the top of it, so we'll have to see. Like the only good setup I see for RR is if you get a retest of this level, for example, like 388, then even from a PA standpoint, like you're retesting a major breakout level, right? So you could buy it off of that. Like that would be like the only potential move that I see that's decent for RR. But this one's just extended in general. Like the reason why RR is running is because serve is also like robotics, and this one is at a much higher, like this one was just like ripping a lot higher. So if you look at it in December 2024, like serve was doing a lot better than RR back then. Like if you look here, like this is what it looked like, and then look at what RR looked like back then. It was like literally just starting to rip, so that was a good entry back then. But yeah, RR is a meme stock now. Like, just be careful for it because it's gonna end up like open. Like, open was also a beautiful short off of 1050. Like I mentioned, I was gonna short this one at 1050. That one played out perfectly. Like even from a price action standpoint, like you got a double top here with the liquidity hunt. It's a perfect setup. And then we sweep the gap fill entry and then we bounced from there. Yeah, BE was also a beautiful short. Went all the way up to 87 and then rejected. Yeah, Iron was a good one too. Like if anybody wants to study like good short setups that you could have taken, like Iron was like one that was really, really good because it had a king node at 50 and then the next node down was down to 40 and it was a very, very clean like range. It was like a 10-point range. Like it was just beautiful and it played out perfectly. Yeah, RR is yeah, we'll see. Like maybe they'll have some news or something, but I'm generally bullish on robotics as a whole. Like I think robotics plus AI and generative AI is just like a very, very strong combination that can unlock a lot of market cap going into the future. So yeah, Surf Safe is an option, like Rich Tech Robotics is an option, but Rich Tech Robotics was my pick because it's more of a sleeper and like people weren't as familiar with it back then. But I knew like they were gonna go heads up against other robotics companies. So yeah, that one I just bought equities on. Like I don't really mess around with options on it though. You can look at Intel. INTC looks pretty interesting to hit 40 going into the next few weeks. So if you get pullbacks or dips on that one, it could be a good one. Yeah, honestly, it might be a little bit late for RR shares. Like I just wouldn't go too heavy. Like you can go in, but just don't go in too heavy. Like it's already up. Like I mean, you already saw it. December 13th, it was at 80 cents, and it's already up to like 580. So like just do the math on how much it's already pumped. Yeah, Intel on the Heatseeker also looks pretty good. Yeah, right now I'm hiring somebody to develop the Agentic Flow Seeker app and module for Skylit. So once we have that one, like we'll be able to view like a lot of the whale flow and also the heat seeker levels on a single pane or like a single platform. And that's going to be like an absolute game changer because FlowGod does it manually right now. Like he also uses heat seeker and unusual whales, and he's been doing pretty good with it. So once we're able to unify that on the Skylit platform, that's gonna unlock a lot more optionality for us. But yeah, anybody have any other questions, or did that cover everything? Like ultimately, like the thing that I really, really want people to learn through today's session is even if you're trading single tickers, like you have to follow the ebbs and flows of the broader market. Like if you're trapped in this mindset of only knowing how to buy the dip, like I guarantee you, you're gonna get destroyed and you're gonna cry when you lose all of your money. So just take this lesson to heart, like really think about what I covered in the beginning of the session, and never chase. Like just don't chase stuff. Yeah, RKTX, RKT, and VKTX. I don't trade those two tickers because those like I also like VKTX for example. I've never traded before. RKT I traded back in the meme days. Like I don't know if RKT is still a meme stock, but yeah, one thing I generally try not to do is I touch meme stocks because like dealers are not good at being on sides for meme stocks. Like they always get caught off guard. So like it's just scary to trust dealer exposure for memes. But let's go ahead and take a look. I think you posted this one in Heatseeker questions, so let me pull it up real quick and see if I can answer by backtracking. All right, so you said, how do I interpret fading nodes that suddenly reappear once the move has begun? And similarly, how do you interpret persistently strong nodes? Actually, I'm going to post this so that people can see the question that you're asking. All right, yeah. Yeah, Ren95, thanks for posting those notes. That's really helpful. Yeah, RR, just be careful for it because like I've already seen on X.com, like a lot of people are talking about it, and generally when a lot of people start piling into a ticker, I get very, very worried. All right, so yeah, general question is how do you interpret fading nodes that suddenly reappear once the move has begun, making it almost impossible to snipe? And similarly, how do you interpret persistently strong nodes that only disappear once it's quite certain the move will not happen? For scenario one, I've attached the VKTX timeline. Fred, are these timeline in these timelines, are these Eastern time? Okay, these are Eastern time. Yeah, okay, got it. Yeah, I'm just gonna try to open up what you sent. That way I could pull it up on my side. Let's see. All right, so you wanted to see RKT for... Yeah, I think RKT at a certain point was like looking pretty decent, but let me just go ahead and double check. Okay, so when you say 3:50, okay, 3:50 p.m., that's why. All right. Yeah, so RKT looked like it was at 20.2, and this was on 919. Um, 919, and then for the week after, it said it was going to go up to 21.5. Yeah, I'm actually looking at this from a very, very fresh perspective. Like I've never traded RKT recently, but let me just go ahead and draw out like how I would think about this, okay? So 919 is right here. This is where it ended. Actually, let me see if I'm sharing the right screen. Hold on. Yeah, so 919. So pretty much what you did is you bought it off the 2050 with the assumption that it's going to bounce up to 21.5 the next day, right? Or the next week. All right. Fred, you could type in the chat and just make sure that my logic is correct in terms of how you were thinking about this. But yeah, what you were saying is, so we closed on Friday at 20.5. The node for the next week showed that we're going to go up to 21.5, right? 21.5. So were you pretty much trading this for a dollar move? Like you wanted to catch this move, right? Fred, is that what you were trying to do? You were trying to catch this 5% move to the upside? Okay, anyways, if I'm looking at this one, for example, like there's a couple of reasons like I from a PA standpoint, like I just don't know if I would go long on this little down candle right here because like it's not really sitting at any support, right? So one thing I always say is like always prioritize and focus on like price action first. Like if anything, like if we closed on the week at like 19.63, then I might consider taking a long here, right? Because what you've got are, two resistance levels here that broke out. And then, I mean, this ticker does not even care about price action. So it's a pretty difficult ticker to play. But yeah, you've got a swing high, swing low to swing high Fibonacci retracement right here. Um, so yeah, currently like it's respecting the fib at 61.8. I'm assuming the reason it's doing that is because it wanted to fill this gap right here, and then ultimately it filled it, and then it bounced off of the 61.8 fib. But yeah, like what I'm seeing is that 2150 was like the major node to the next column over. And if you actually look, that next column over, the major node was 3 times the size as the current week's node. What that means is that it's a very, like, the probability of that kicking in on a Friday is actually very high because what happens after Friday rolls off, the next week's nodes come into play. One thing that I always mention is always check to see where price has been delivered from. If you look at the 21.5 in the next column over, even on Friday, we actually had price delivery from 21.5, right? So we had price delivery from 21.5 and like in that scenario, like I would just expect like it's getting delivered from that node and probably over the week that 21.5 node probably got weaker and weaker. Is that what happened? Like that's just my general assumption. Like I always tell people like make sure you're ensuring that price hasn't been delivered from a major node. VKTX was also delivered from a major node. So hold on. So RKT, like Fred, first of all, like I just don't see like if I look at the chart itself and where you entered, like I don't see a bull thesis there. Like, I mean, you could yeah, I just don't see a bull thesis. Like it's been extended, like it tapped into this level right here. Like I don't know if you're trying to trade a breakout or anything, but I generally don't like to trade breakouts. So like just when I look at it, it's not really a trade where I would think it's worthy of taking. If anything, like I would have waited for a retest right here. Where if you caught the retest, then you would have caught it like a good, it's like a solid 70-cent move or something like that. But yeah, this one needed to cool off, man. Like this one ran all the way from 1669 all the way to 22. It did a 30% move within a 1 week period. So yeah, I would have just been cautious on anything like that. You would probably want to buy it off the golden zone or something at that point. Okay, you bought it off the retest and then did you make any money on it at all? Like when it bounced? Because I think the first time it retested, it bounced at least a couple of points here. Yeah, good bounce. And did you hold it and lose money or did you make money? Yeah, like RKT is doing like a nice golden zone bounce right now after the retracement, so it's pretty good. Let's see. Yeah, so another thing, Fred, like just because there's an upside node doesn't mean that there's going to be a 100% guarantee it hits, and this is why like you need to have like take profit rules in place, even just in general when you're trading, because I mean the dealers can shuffle it, right? So if you end up getting a shuffle like while you're holding a trade that's up 30 or 50%, like there's a very high chance that you might just end up going red on that trade. So like don't try to shoot for like don't try to shoot for the keynotes every single time. Like there are a lot of probabilities that it does play out, but if you're up like 30 to 50%, man, like that's still pretty good profits, especially if you're playing like a reversal. Yeah, JD was a good example, Max Max. Like that was one of the ones like I think I posted a screenshot to you guys, but one of my friends asked me like, what they should take, and I told them to buy the dip on JD at 33. I think this was on Thursday or something like that. Um, yeah, JD was just giving like a monster bounce. Like I even have a line drawn there. Like it did a master monster bounce off of 33 all the way up to 35, and then even the day before, like it just keeps on bouncing off that level here. So that was a good one. Yeah, and let me take a look at VKTX. Yeah, sorry, man. I wish I had a little bit more time to prep for this one, but honestly, I didn't, and I just don't. I've never traded VKTX before either, but I do know that VKTX had like a pretty bullish setup in general, and like this is something that I would be a little bit more bullish on, ultimately because it's not overextended. Like it's actually, a ticker that is trying to come back and retest the breakout. So I would have played bounces on this like all day. Like I would have played bounces off this all day, and like this is a setup that I would be more bullish on in general, just from a pure price action standpoint than anything else. Yeah, JD, like let's go ahead and we can cover JD as well. Let me just see. Yeah, Fred, one thing you can do, and like maybe, so Fred, this is like, I would do it myself, but like we would end up being on this call for another 30 minutes, and I don't want to do that. But when price is being delivered from a node, take the before value of that node that price was delivered from and get the after value after it was delivered from that node and try to see if that node had actually held up value pretty well, or after it was tapped, it started to go down in value, or after it was tapped, if it went up in value, and like you'll probably get a general idea. And also on VKTX and RKT for both of them, just look at where the other nodes on the map were in comparison, and then um, post that in the channel that we have in Asgard, the one that says trade reviews and recaps, and I'll take like a deeper look into it. But like I would want you to do that exercise. Like I would want you to do the exercise and like we can try to learn off of that. Yeah, so we can go ahead and look at JD real quick. So JD, like this one was pretty good. Let's go ahead and see. Like I think Tuesday, and then even going into like okay, let's see what the Tuesday map looked like on JD. All right, so JD here. Like you see we've got a major node down here at 33, and then like the thing that I like about JDE in particular was that like on the weeks following, like you've got major nodes up at 40. Like 40 is pretty well stacked, and like even on October 17th, like you've got pretty major nodes up here, and these are all like three times the value of the nodes that are down here. So to me it looks like we've got like three times the strength to the upside than we have to the downside. And as I was saying, like if you see nodes that are like brightly lit up 3 weeks from today, what I generally do is I play it off of the lower nodes. I play it off the floor nodes on the current week. So that's when I said like, okay, if it ever goes down to 33, like I'm just gonna buy the dip on it and I'm gonna close my eyes. Even if you bought out for 1017, the 40 calls on that bounce on JD off of 33, like the calls literally went up like 200% on that shit. Like even though it's 3 weeks out. So like JD is a really, really good example of like a swing setup that you want to take. If you took like weeklies, like you'd be up even more because like we ripped all the way up to, 35.79. But as I was mentioning, even if it overshoots, like it's gonna come back to like it's gonna try to come back to 34 because like 34 was like the other keynote on the day. So as you saw, like even every time it goes up, it just drops. So I actually didn't hold my swings because like I didn't see further accumulation to the upside for the same week. But maybe going into next week, if we fill this gap, like maybe we can go ahead and catch it again. But yeah, this 33, it is getting hammered like a couple of times. So like if it came back for a gap fill, like I might take like a small auto swing or something for that. But yeah, JD is already used and abused. Like there was too many good setups on that one. Cap R, I don't think I have that one on Heatseeker. Unless I am. Yeah, we don't have Cap R. Well, yeah, I've seen some setups that are too good to be true. Like, usually when I see a setup that's too good to be true, like, I'm generally skeptical and, like, I'll size a little bit smaller than usual. Um, I think Netflix was a good example of it. Like, Netflix this week had, like, prices at, like, 1205 or something like that. And then it showed a potential 85 point upside. And when I see stuff like that, I'm like, that's got to be a trap. And I just didn't care to play it. Also, like, I knew the market was going to be weak, so I didn't want to play upside tickers anyways. So, I stayed out of that one. But, if you're ignoring indexes and you're ignoring like QQQ and the VIX and like you're like, oh shit, there's 85 point upside and you're just jumping into it, then yeah, there's a lot of probability you're gonna get burnt on that. But Intel in general has been looking pretty good. Like the only worry I have about Intel is like now it's just getting too popular, but like, this 40 looks inevitable for now, so I'm just gonna keep an eye on it. Um, the thing is, for the current week, it's topped out at 36 to 35. So if it dipped down to like 34 or 33 and catches a floor somewhere, I might take that for a swing 3 weeks out. I've got my eyes on that one for sure. App was good. I mean, App paid pretty hard on Friday. Like App had a keynote up at 680. Honestly, like if the market supported it, it probably would have hit. Like App and D-Dog were like two really, really good ones on Friday that we saw that still went up despite the market, kind of stalling out. Yeah, app still looks like it could hit 680 this week. Like it might break out and hit 680. Yeah, man, dude, if you traded long enough or if you traded app long enough, like you wouldn't doubt the overextension on app. Like app does freaking crazy things. Like, and this is just the basics of like price action thing. Like Heatseeker helps for sure, and it's going to accelerate your ability to become profitable in a much shorter time frame than if you had not had it, but there's still fundamentals of trading that still apply. Okay? What I mean by that is every ticker trades differently. Every ticker has a different personality. Every ticker has different institutions and funds that are trading it, which means that there's different algos that are involved with trading different tickers. So you just need to become familiar with them. Like CVNA and app are two examples of tickers that literally defy the laws of gravity. So don't short it just because it looks it looks extended. Like that shit can fucking rip and like it'll literally rip a hole in your ass. Like App and CVNA are two tickers I don't mess around with. You could pair Palantir in there with to the like Palantir and Hood are pretty nuts too, and Hims. Like that's why like I just always mention it. Like just trade SPY, QQQ, IWM, like become a better price action trader and then start adding like single tickers to your arsenal and like just keep on like learning them. Like just keep on adding them and adding them over time and like you will have like a lot of tickers that you're very familiar with and then you'll just keep on cycling through them. Yeah, I mean Palantir looks like it might stall out at like 182.5 or 180 for this week, so you'll have to keep an eye on it. I mean, if it can clear 182.5 with conviction, then it might go up to like 192.5, but yeah, I don't really see a solid trade on Palantir this week. Yeah, I think a lot of people are seeing that it's flagging right now, so they want to take it, but I mean, it's almost at all-time highs right now. I don't really like trading in tickers that are at all-time highs. Like you're pretty much going for the final scraps. I like to trade moves that have a lot of upside left still, or a lot of meat on the bone. What is the oh, so you're looking at Palantir because there's a 15-minute fair value gap above that it hasn't filled yet? There, yeah, so I mean it filled that one. You're probably looking at this one, then you're looking at it to fill this one. Yeah, maybe it'll hit this one, maybe like 182.5 and then it rejects from there. But yeah, Palantir, like I don't really see a strong trade here. Like it's not really bouncing off of anything. Like maybe if it bounced off this level, it could be good, but it's just kind of hanging in thin air right now. Right. Yep, no problem. Any other questions that people have, or are you guys all ready to kick ass this week? All right, that's what I like to hear. All right, everybody, have a good weekend. Thanks for joining. I'll go ahead and upload it to YouTube when it's available. Hopefully you guys learned a lot today, and I'll look forward to the next one. Yep, no problem. I'll see you guys later. Have a good weekend.